Okay, next part of departmental accounts, the next step in the process to do the financial statements is a consolidated income statement. Now, there's 3 bits in the process now. We start with the departmental account. This is consolidated income statement. Then you move on to the balance sheet. Now, consolidated income statement is very similar to what you've previously done. There's just a couple of changes. Now, departmental accounts is looking at the performance of each department. Well, the word consolidated just means putting it all together. So you're looking at the whole hotel, looking at the whole operation together. So that's why we use the word consolidated. Now, what we do is we now use the gross profits for each of those departments and we put them into the revenue section. But then we also pick up any other revenue items and expense items not used in the departmental accounts. So there are going to be some items that we haven't used yet, like room sales, interest received, wages and salaries paid, rent paid, interest paid. All of these items are on the trial balance. We haven't used them yet. And so now's the time to put them into the income statement. Now here, the formula still stays the same. So it's still revenue less expenses equals net profit. Still the same. Now just a note, now we're using net profit. So net profit is the profit after all the expenses have been taken away. It's the final profit, just to differentiate it from gross profit of each department. So just so you know the difference. Okay, so revenue. This is the first part we tackle. So revenue is the gross profits for each department. So gross profits for each department, put that in. Add in any other revenue items that you haven't included. List each item individually. So use the left-hand column, and then we're going to total them and go total revenue. Big important part. Please don't double up on food sales or bar sales. These have already been taken into account when you calculated gross profit. Okay, so no need to put those sales figures in again. Okay, it's easy to put them in again, but please don't. You'll find that it will throw your profit out, it will throw your balance sheet out as a result. So just so you know, don't. If you've already used it in the departmental account, don't use it again. Then we go to our other expenses, or operating expenses. So these are other expenses, like overheads, that are used to run the business, but they're not departmental expenses. So please ensure again you don't use purchases for food and bar. So don't double up again. They've already been included in the departmental accounts, gross profit figures. Don't put them in again. Once you've got that, once you've got the revenue, once you've got the expenses, you can calculate net profit. Or it could be a net loss. And again, if revenue is higher than expenses, it will be a profit. So it's the aim of any business to make a profit, which is good, because it helps build up the business. If you keep on making a loss, it just means the assets are being depleted and potentially the business might go bankrupt. Now here's a layout of now the consolidated income statement. So we have our revenue items, and again gross profit from food, gross profit from bar, and any other revenue items. Put them in the left-hand column. We total them, total revenue. Then we grab any other expenses marked with an E that you haven't used, put them in under the expenses part, and again total. Then you can calculate total revenue minus total expenses, gives you your net profit. Okay, so I've just explained how it fits into the format. We've got departmental accounts, income statements, then balance sheets, and it still uses revenue, it still uses expenses, but it uses the gross profit from each department. Make sure you don't double up as well.